Mortgage rate applications have been steadily rising for the last 3 weeks in January of 2024. This is going to give us some key insight of what to expect going forward throughout the year. In today's video, we're going to be talking about those mortgage rate application rates, mortgage rates, and how this affects the rest of the market as we progress into the buying and selling season in the spring. Momentous family, thank you so much for joining us here today. We have a short little update. We appreciate you guys following with us every single week. And of course, if you're new here, please give us a like and a subscribe so that way we continue bringing this message, because our goal is really just to educate buyers and sellers both on the construction side, but then also the real estate side of the action of actually buying and selling homes. My name is Patrick Robertson and I will be leading you here today. I'm a licensed real estate agent. I also have a high-end residential construction company where we do remodels and custom built homes. Mortgage rate applications, very, very exciting. So 3 weeks in a row, mortgage rate applications have been increasing. The first week in January, mortgage rate applications jumped 10.4% week over week. In the second week of January, mortgage rates applications again went up 9.9% week over week. And now, the third week in January, mortgage rate applications have continued to increase 3.4% week over week. The 3.4% might seem like a lower growth. However, remember, this is week over week gain, which is very, very exciting, showing positive interest in buyers as more and more entering the market and thinking about buying a home. If we add all these numbers up, over 20% of people are thinking about buying a home and actually going forward to get pre-approved. There's gonna be a lot more demand in the market of 2024 for many, many reasons. It might be pent up demand. It might be that interest rates are coming down. Either way, demand is increasing. So the next question is, will sellers start to sell their homes? Because as we see in the construction side of things, new constructions and finished builds are not coming online fast enough. The shortage in housing supply doesn't look like it's changing anytime soon. The only way to alleviate this is if sellers are willing to sell their home. When we look at refinances, however, refinances are down 8% week over week, which indicates that maybe people are thinking about buying or selling their home in the future rather than doing some remodels or pulling their money out. Notably, FHA loans and VA loans are down 20 and 50 basis points, so 0.2% and 0.5% respectively. And what this really shows us is that that is a percent of the total market share. Although there are more mortgage applications being had, those mortgage applications are for conventional loans rather than for the first home buyer, or if they're going FHA or VA loans. Now, when we look at this is that, okay, why are more buyers entering the market, especially in January? We expect that to usually hit in the March-April zone when they're really thinking about buying. Well, remember that people get the pre-approval and they start looking at their homes before they're actually planning to buy a home. Secondarily, mortgage rates have actually decreased almost 1.5% since the October high of 8.01%. Yes, rates have been down for about 6 weeks now, hovering around that 6.7%. However, we believe some of this lag time in people going to get pre-approval and then rates coming down is that the transfer of information takes time for people to actually want to buy a home. Not everybody is reading the daily journal trying to figure out what the mortgage rate is that day and seeing that if it's in their buy box or their zone that they're thinking about actually going forward to purchase a home. Mortgage rates actually have gone back up. They're at the 6-week high of 6.69% as of today per Freddie Mac. Notably, the lowest interest rate was on January 18th of 6.6%. And if we look back to that December 18th point where we saw that massive drop off and things starting to level off, mortgage rates are at 6.61%. So this 0.1% kind of sway we are seeing going on in interest rates over the last 6 weeks is what we are seeing is that rates have kind of balanced out for now. A lot of the market conditions have been programmed in after the more comfortability that we're going to probably see some rate drops in the future. However, a lot of people are predicting that mortgage rates aren't going down, they're slightly climbing because GDP has shown positive growth. Now, it's not always the case, but positive GDP growth can result in higher inflation. So some are speculating that because GDP is going up, there's some hidden inflation going on in the market, we might not be done with this whole inflation bubble. We'll cap this video off with talking about what this all means. Overall, 3 weeks in a row of increased mortgage rate applications at statistically high rates, not just the 1%, and this is meaning more buyers are entering the market. More demand. Will this raise home prices? I don't know. But what we do know is that there's going to be more buyers looking for homes, and hopefully that means more sellers are going to be willing to sell their homes because of the increased demand in the market. What we are seeing with rates is that, like we said, we think there is a lag time between rates actually coming down and applications for home buyers going up, and that is the transfer of information. It's looking like there's going to be a 30 to 60 day lag time if there's any future rate drops in terms of buyers entering the market. Going forward into 2024, this is going to be some interesting data because what we are seeing is that people aren't waiting until a 6% mortgage rate to go buy a house. They're looking today to buy a house. They want a house today. So even that little bit of 1%, which is dramatic, that goes into a 10 or 12% change in the actual value they can afford on the home. They're not waiting for 5% or 6%. So some sellers may be weary that there's not enough buyers out there to purchase their home. I think that's a huge myth. I think there's tons of buyers out there as long as the home is priced properly, well maintained, and quality. So 2024 is actually looking quite bright for the housing market. We do not see a crash or recession. Some markets might see some depreciation in a part of the year. However, throughout the year nationwide, we are definitely going to see a positive 2%. And some markets, I think like the Dallas Metroplex that we are in, will see a 5 or 6% just because demand is still there. Momentous family, thank you so much for joining us here today. We try to keep this one short, a nice little update. If you did like this video, please do mind give us a like and a subscribe so that when the next one comes out, you get notified. Until then, guys, we greatly appreciate your support and we will catch you guys on the next one.